yes, Jasdeep, first of all, since you have been there in the VC space, right, and that's been quite long, you have come from IB, then debt restructuring, then into VC, right, and now investments across the sectors, across the stages, right. What do you like the most? VC, debt, IB. What's the thing that excites you the most?
No, I think been lucky that I'm sitting here and I'm able to share my experience with all of you who are there on the call. I think one part about the job that I really, really like for me, that is always the interaction with the founders. I absolutely enjoy the hustle. What really, really strikes me, and that also goes with the personality that I carry. And I always say this, while it is always said that find something you love, I think while it is oversaid and overdone, I think what really becomes important is if you're working into anything, doing anything sports to, in IB or any of the verticals, I think what really important is to find 3 out of 5 things that you really enjoy, because in everything that you do, two things will always be there that you won't enjoy. And out of those 3 things, find that one thing which you believe that you will become the master of it, and you'll be better than maybe even your bosses. And for me, I think naturally what I really liked was to have conversation, understanding the founders. I really personally enjoy the hustle a founder has. I think for me, before any investments that I do, or I even get to a point wherein I make an offer or there's a conversation, what really strikes me is the journey a founder has had. And sometimes the people that I meet, Himanshu, those are such lovely folks, and the journey is so inspiring, and that you're kind of blown away that the kind of hustle that people around us have. We we, while as an individuals, we always try to go a little distance to find some motivation. I have grown up playing sports, watching sports, big Virat Kohli fan, and we always try to do that. But I think one thing which sometimes we miss, and I have been a criminal regarding that as well, is that the inspiration for us, the journeys, is all around us. And for me, that was the part that really, really drew me towards the ecosystem that what I'm doing right now. And this is what I enjoy.
Interesting. Nice. Nice. Great perspective. And since now we know about how why you entered into the VC world, right? And you have done lot of investments into the various sectors, right? Some of them being consumer, EV, right? And bunch more, right? So, but tell me a bit more about consumer. It is said that, in general, India has a lot of consumption. India will consume a lot of new products, right? But most of the D2C companies are getting stagnant post hitting 100 CR revenue mark, right? How do you evaluate companies which can actually go beyond? How do you analyze the consumer investment, and how do you think the sector is emerging in a longer way?
Got it. Got it. So, I think, Himanshu, I slightly disagree. I have, in fact, in my portfolio itself, there are a bunch of companies that are hitting a 500 crore ARR mark, and
That's why
even
you are the
beyond.
right person to ask.
No, I don't know if I'm the right person or not. I just try to share my journey, the experience. See, I think what really comes through when we invest, because I'm a part of a venture debt ecosystem, not an early stage equity ecosystem, we generally try to come after Series A when for a product a PMF has been established. Post that, I think it is a combination, because if we see in a similar ecosystem and in a similar space, I usually have done 2 3 investments, so at least I know what kind of a TAM a category would bring. For example, in the jewelry space, I have done Jiva. There is Okera in my portfolio, and there are a couple of others that I've evaluated on the top of this. I in the dairy segment we have Country Delight and we have Sids Farm as well. And apart from that, there are other couple of companies that I have evaluated. Now, to answer your question, whether I see there would be a TAM problem stems from my experience, whether I have evaluated a similar space or similar segment or not. And generally, in a venture debt ecosystem, today I have about 220 companies across funds at Alteria. Generally, I think there is a set format, or there would at least be a company in one segment where I would see, okay, if like in similar space, I was telling you in dairy segment, I had Country Delight. We came in Country Delight when it was maybe doing 2.5 million MRR, and today it has grown past well above 100 crore monthly mark. Now when I came in to another company which is a slightly smaller uh, one, at least I know, which is Sits Farm, at least I know what kind of a demand or a TAM a segment would have. So because a venture debt splits across and horizontal, I'm able to figure out more quickly that what kind of a TAM a company would have. And this is in most of the cases. In venture debt, we are not taking a seed stage call wherein I am actually betting on which egg would turn out to be a golden egg. I am actually backing which of the metal eggs are going to eventually turn out into gold. We usually come after Series A. And yeah, this is through our experience, uh, through the connects that we have. We keep on having multiple conversations throughout the ecosystem that you're able to realize. Some of there are listed players. So across this board, we are able to figure out which companies could be a breakthrough. And I think because we have seen the journey of so many companies, I think we have been lucky that way, that we have seen that a lot of companies, um, the bets that we have taken have actually worked out well for us.
Interesting. Since this is a curious question, right? We also had Aditya, who's the director of Innoven, right, on the chat. And he also talked about how he analyzes how venture debt works, basically decoding that stuff, right? But we know that in equity investments, people generally fight over that this deal I'll take around, I'll give better valuation, I'll give better terms, and XYZ stuff, right? How I help the companies and all of that. How does this thing, or how does the competition seems in the venture debt space? How do you see that space, and how do you deal? Do you also guys fight over deals? How that stuff works like?
See, more than fight, I would rather term it as a healthy competition.
Yeah.
I think it's always good to have a healthy competition in the ecosystem. We do compete for deals across the other funds. However, we also know which ones to pick and which ones to let go. Simple. I know which are the segments that I'm interested in. There have been companies where I have seen, in segment, sorry, I've already backed a company. However, there is another company that has come for evaluation. I've passed it. So there is a healthy competition with other funds. However, I think everyone at their own uh, pace realizes that because you're in the cricket game, eventually you will also have to learn that which ones to let go as well. I think in a cricket analogy, every outside the off stump ball cannot be hit for a cover drive. You need to learn which ones to let go as well.
Interesting. Nice. Nice. Interesting. And since we are talking about this was just out of a curious thing, right? While we were discussing consumer, and there is a sector that you have also invested in, like Ola Electric, right? And EV in the space. And when I see the Ola must have reached out to you, right? They must be burning a lot of cash. They might not be having a profitability thing, right? And at that time when they were raising, they were getting literally insane valuations, right? They had 301x multiple on their revenue, right? uh So how did you evaluated them, right? How, what was the analogy behind investments? How did you looked at it, right? All of that. How did you invest it? How do you think that, when they will be turning out profitable? Walk me through that mindset when the deal came to you.
So I think I'll just take a step back. Actually, more than Ola, I'll just, try to give you an answer of how are we looking at deals or companies which are loss making or going for IPO. So I'll tell you how we approached Ola and why that is a fantastic outcome and a fantastic company from an investor point of view. While, you know, we have seen the journeys of multiple company, there will be a journey for every company in every segment. Profitability is important, but there will be a process, there will be a journey for a lot of companies in different segments. When we evaluated Ola, or rather, so we are an investor in Ola, we are an investor in Ether, we are there in Euler as well. And we have seen this ecosystem build from a very, very nascent stage. And there is definitely a journey. What I really give credit to Ola is they have literally created an EV market, EV two-wheeler market in India with likes of Ather. And because these guys were able to create a market, afterwards we saw TV likes of TVS, Hero following the suit. It was not the other way around because the other guys were already winning the race in the ICE scooters and there were already apprehensions whether to go for a EV segment or not. What Ola Ather did very well was to create a market. And to create a market from literally nothing is not an easy task. And I've visited, Ola factories as well. What they've created is not something that can be built overnight. Not in 1 year, not in 2 years. It takes a lot of progress. Today, when we see about almost 1 lakh scooter being sold in India or slightly more monthly, maybe 1 lakh 20, when you see the top 3 4 guys all doing about 20,000 or a little more than 20,000 scooters a month, there has to be a lot of credit given to Ola and Ather in that way that they have created that market. Profitability, yes, that will follow and that will happen. But there will be a journey for it.
Interesting. And how do you see this EV market right now? Because there were a lot of players that come into play, like Simple Energy came up, Ather and Ola, and all of these. Now the shift dynamics has shifted to AI, right? Lot. So how do you see
Sorry?
this? Now the dynamics in the VC space majorly shifted towards AI, right? Everyone is focusing, investing in AI majorly. How do you see this EV market? Do you still think it's much more relevant if any new company comes up to you tomorrow, right? Will you still evaluate it, or do you also looking out to the new sectors, emerging sectors like AI, etc.?
Yeah. So, very good question, Himanshu. I think we have seen the journey of these companies. And I think what you're asking is particularly on the two-wheeler segment in the EV market. There, while the market is already created, there are some spaces left where new companies will be created and are getting created. As we speak, we are evaluating one more company is the similar segment, which is a EV two-wheeler space. The blueprint is already there. However, there are certain aspects in the market which are still left to be untouched. For example, when we speak about the car market, there is a sedan market, there is an SUV market, and there is a hatchback market. And there are takers for every kind of cars. And in every segment, there are different companies. And within SUV also, there is a entry level SUV, then there is a mid level SUV, and then there is large SUVs as well. Similar kind of things are happening in the sedan space as well. That way, even while we see a two wheeler and we say, okay, there are only two wheels, and what can eventually be created on two wheels, and it has already been created. Actually, I don't agree. There is a blueprint which is happening in the car market, the similar kind of space, two-wheeler market will also evolve, wherein you will see different price points, different scooters, different capabilities. And when I say different capabilities, it could be, let's say, a scooter having larger storage space, like an SUV of scooters, or there could be a scooter which is already being created or will get created, let's say will have a performance which can be termed like a fast scooter.
Sports car.
So there, like a sports car, right? In the two-wheeler space, Ultraviolet is a fantastic example of that. Ultraviolet is a two-wheeler EV company creating that kind of a space. So this is the blueprint that will be carried forward not only in cars but in two-wheeler as well. Although I do believe the kind of maneuverability that one will have in the two-wheeler segment will be less, but there is still a lot more to play with.
Interesting. And when you're talking about these markets, etc., right? And since it's a debt fund, right? And I guess Alteria is the largest debt fund, if I'm not wrong,
Yeah, we are the
right?
largest debt fund.
Yes. How do you define the success of a debt fund, right? In VC, you could say 25% IRR, 20% IRR. How do you define the success of a debt fund? How you will define that?
I think similar way returns. While I'll not go into the specific what returns, we target. The fantastic thing about venture debt is it can be broken into two parts. One is a fixed income and one is an equity. Equity kicker, the warrants that we take. There is a
Mm,
return on fixed income that we target and we get. There
mm.
is an equity kicker that we take on top of the debt that we are giving. So combination of that is what makes venture debt very interesting. Unlike an equity fund that will be invested for 7, 8, 10 years and the returns will only get when you get exits, I start getting money back from day one. That is my fixed income. What is the kicker that helped me get better returns is the equity kicker. So I'm a combination of debt and equity. That's why venture debt.
Interesting. And when we are talking about these venture debt and when we are talking about investing in new age companies, what is your next big sector that you're looking at to invest in? What is the next big thing that venture debt is looking towards?
I think that way we are not picking up sectors. We are a sector stage agnostic fund. However, I have personal opinion that a combination of consumer and healthcare will really become big in India. And when I say consumer plus healthcare, one can have an FMCG angle wherein there is already a lot of talk. I think we open our Instagram, I think all of our feeds will be filled with protein. There's a health angle to everything from chips to chocolates to powders. So we are getting aware. So that market wherein we are talking about a consumer plus health angle is a very, very interesting angle. Uh, we will also see a lot of equity action or companies being created on the consumer proper healthcare side as well. Like I think there is a lot of talks uh, about cosmetology, hair transplant, and we have not seen a lot of equity action, venture action there. And when I say, I think I should correct myself, not only equity, but a venture action. And when I say venture action, both equity plus debt. And I think going forward, we will see a culmination of venture equity and venture debt play on the healthcare consumer side, on cosmetology side, hair transplant side. There will be a creation of that offline models, online models there, and that is my personal view how I
Interesting.
see market evolving. And on the I think AI is here to stay. Uh, One part of AI which will become very very relevant in India. I don't know whether it will be created by an existing company or new company. Is an AI in travel. Where I'm coming from is I whenever we want to book a travel and whenever we travel abroad, we search for different flights. There is a 20 of flight option, there is a 20 hotel option that is curated for us. Rather, there could be a AI assistant for me wherein I can just write, I want to travel, let's say, to Portugal for 10 days. I'm traveling from Bombay.
mm,
This is my budget for two people. These are the dates.
mm,
This is where I want a curated list of maybe three, four flights,
mhm,
curated list of hotels being provided to me. Because right now, if you go to the existing guys, uh, you get a bunch of 50 options.
mm,
Now, the contrary may happen that, the existing guys like Make My Trip or Ibibo, Ixigo may just decide to build it on their own. However, I'm really bullish on that space that we'll see in next, I think we'll see this in next 1 to 2 years, like a platform being made by an existing guy or outside where we'll see that AI in travel and that will gain relevance.
mm. Interesting. And when you say around AI in travel, and when you say around such kind of a things, right? Do you think like integration with WhatsApps or some kind of chat tools where the people can directly book out the flights or something via the WhatsApp, like WhatsApp being the GPT of booking out something like that?
Possible, see, I think that is an easier step to solve.
Hmm.
Right now, nobody has been able to integrate it so well.
Hmm.
I think it is easier for an existing Make My Trip, Go Ibibo, Go Ixigo, Trip.com to make it rather
Hmm.
than a new guy. However,
Hmm.
you can become a platform of platform.
Hmm.
But then I think the second question there comes, how will you make money? But everything will eventually get solved. And we will see
Yeah.
these things emerging, evolving. Your question on WhatsApp and all, I think these are just integration question and which I think will eventually be solved.
Hmm. Interesting. Interesting. And when you're talking about debt funds, right, being in place, when you're talking about debt funds, investing around in different things, right? How do you see like walk me through how you guys are evaluating? You said you are looking at companies in Series A and more, right? But how you're evaluating a Series A company? Suppose I comes to you, I say, hey, I've got two different funds funding me in my Series A round. That's nearly $8 million that I'm raising. How will you evaluate me then? What's your criteria?
So I think the only thumb rule that we follow because we have venture debt, uh, we can only fund or we fund only companies that have raised institutional equity. So if you're
Okay.
not a VC backed company, I will not be able to evaluate you. That is a non starter for me.
Hmm.
Now, it is a culmination of three, four things. How much equity is being raised? One,
Hmm.
who's backing you, whether that is a renowned VC or not. Uh, Segment slash space. Fourth, founder. Fifth,
Hmm.
financial. How are the numbers looking
Okay.
like? I think culmination of these three, five things takes me to what kind of risk and return I want to achieve.
Hmm.
So
And
five things here and two more things, which is a risk and return. I try
hmm.
to get an answer, and this is how I evaluate any company.
Okay. Okay. And when we are talking about evaluation, how post investing, right? There must have been cases where your debt converted into equity or some portion of equity you must have taken maybe while investing as well, right? I know it's a debt kind of a fund you invested via CCD or some kind of a
No,
debt
but we
instrument.
take equity warrants in every
Yeah.
case.
Yeah. So that's the thing. So there would have been some
Hmm.
conversions as well, right? Then how do you decide that,
Conversion.
like in equity where the company might not have been able to pay or XYZ kind of stuff,
Oh, that way.
right?
Okay, got it.
So
Got it.
how do you decide at that point of time when to take an exit? How much is the say that this much amount of return is the thing which we target, and once we get it, that then will be good to take an exit on.
I think you'll be very surprised to know. I think that way our underwriting has been very, very good. Our losses, we have fund about, I think we would have funded about what, more than $1 billion in last 7, 8 years.
Hmm.
Our losses are less than 1%.
Okay.
And people generally think that when we are investing in startups, the
Hmm.
losses would be very high. But this is where my underwriting expertise also come in.
Hmm.
While I am driving on the road,
Hmm.
there would be some potholes,
Hmm.
there would be certain unwarranted incidents. I will not be able to avoid them completely. However, if I'm able to keep them in check because there is a pool that I manage,
Hmm.
I'm able to, have those losses very much under control. And what kind of tenors do I need to do? What kind of amount that I want to do? Is this is where my understanding and underwriting comes.